My next guest uses the barbell approach, which right now is we're talking essentially on one end, mega cap stocks, which of course would be technology, up 28% from the S&P this year, but also industrials and financials and healthcare. So you've got financials here, healthcare here, and you've got industrials right there. It's sort of in the middle. That's your balance. That's your balanced approach. I want to bring in B. Riley Wealth, their management chief market strategist, Art Hogan. All right, let me just ask. I mean, in a market like this, don't you ever feel like cheating and just go all in on one, make it a kettlebell approach?
Yeah, it is awfully tempting, especially when you have these parabolic moves, when we realize just how much memory and compute power we're going to need for this AI revolution. But it's also a much healthier place to be long term if you have a bit of balance, right? Like Kevin just said, you don't want to put all your chips in the chips, and there's a lot of other ways to play this. And I think if you look at the current regulatory environment, I think it's very favorable to both healthcare and financials, and I think they're going to pick their heads up as the first time technology takes a minute for a breath of air, and I think that's one of the rotations we'll likely see.
Is that the only thing you think is wrong here? I mean, because for the last year, a lot of folks have loved healthcare. There was a moment where we saw United Health rebound after Warren Buffett had got involved. The financials, the bank earnings have been really good, and they get these false starts, and then all of a sudden they pull back. Is it just that they're being overshadowed?
I think it's being overshadowed, a little crowded out, and I also think the overhang in financials was really that scare about private credit and how much exposure some of these banks had. I think that's dissipated a bit, and I think once that's behind us, we're going to start moving higher on all the banks. And I think we're going to see a lot more M&A. We have way too many banks, so I think that's going to be a positive for the space as well.
Retail stocks looking pretty good today. Dollar Tree's up. In fact, Dollar Tree and Best Buy, your number 1 and 2 gainers at the start of trading. You like AutoZone, and this is a stock. I mean, if I pulled up a 20-year chart, this is one of the best 20-year charts in history. Recently, it's pulled back. I'm not sure why, but you think this is creating an opportunity.
I really do, and I think they just reported a quarter. There was a bit of a disappointment on the revenue line. Earnings line beat it handily. Their guidance was fine. And oddly enough, I learned something on a conference call that I never would have guessed, but it's the cooler weather in the last quarter stopped people from fixing their air conditioners in their cars. So all of that's going to be pulled into the next quarter. I think these guys are doing the best job. I think that there's two global auto parts. One's O'Reilly. AutoZone's got much larger geographic distribution, and they continue to buy back shares.
Yeah, they're one of the biggest share buyback companies in history. By the way, I think the average car is like 16 years old. That doesn't hurt business either. I want to ask you about some of the juggernauts. You've shared these with us. They've been in your focus list for a long time. Advanced Micro, Apple, Broadcom, NVIDIA. Have you taken profits on these, or you just keep increasing your targets?
So what we do with the focus list, we have the ability to, on a quarterly basis, make sure our position sizing is correct.
Okay.
So we can, if we're out of balance like we are with AMD and Broadcom right now, in balance on Apple and NVIDIA. And I think that that's the best way to look at it. So you can it kind of forces you on a quarterly basis to get your position sizing back to where it should be. So
you've got a couple of other names on the list that are interesting because they're old companies. Ethan was founded in 1911 and United Pacific in 1862. So you can be old and hip, I guess. Interesting enough, Union Pacific was actually formed from Abraham Lincoln signing the Railroad Act in 1862. And that brings me full circle to what the president is doing. President Trump with quantum, drones, rare earths, semiconductors. Are you okay with that? A lot of traditional Wall Street fans don't like that. I think it's necessary in this race.
Think about government investing in all sorts of things that have brought us to a better place throughout our history. So it wasn't just the railroads, it was building out the highways. It was certainly in healthcare and biotech research and all of the work that the government's done. It makes sense now that we're in the fourth industrial revolution to have the government involved in investing and making sure there's distribution of money going to the right places. And quantum computing, which is going to be a longer term invest, is going to be something that's going to be very important. The same thing with drone technology. We're learning in the current wars that it's a much more important piece of the puzzle. So yeah, I think there's a long history of this government investing in companies, especially at the cutting edge of technology.
Yeah, well, good stuff. Cutting edge or old school, you always bring the goods. Art, thanks a lot. Appreciate it.
Thank you.
All right, folks, coming up, consumers are spending, right?